Hey everyone, let's stick with us versus herd. If it's your first time here, like the content, hit subscribe. If you want to get notifications from when we post videos, tap the bell. And if you want to join the UVH fam, our community, links are below in the description to our Discord and our options trading group on Facebook. Both are free, so feel free to join. What I want to talk about today is taking profits, or when to take profits in this highly volatile market. So right now, we have huge rips, we have huge dips. Right now, S&Ps are starting to come back down to its lows. Apple's starting to come back down to its lows. While the market's hot, I've been pretty much just concentrating on just a couple tickers. But one of the things that I see common enough is people letting their profits run. And I think it's okay. I did let my profits run a little bit, but eventually running your profits turns into greed. And just to give you an example here, today I closed out Apple. I had two of the 295 puts, close them out for almost $2,200 in profit, and they cost me. I sold them this morning for $13.70. They cost me almost $3. I got them for about $2.90. So had two for $2.90, bought them for $2.90, sold them for $13.70 at open, and the risk here is that these are day of expiration. So I put this trade on yesterday. Today is Friday. They expired today, so you didn't want to take any risk and of it potentially going to zero. So the risks are with a trade like this. If you're an experienced trader, you definitely understand this. That you can on a day of expiration contract, you can go up from huge profits all the way down to zero within the same day. So risk is extremely, extremely high in this. And as you can see, these expired today. Is 0 days left on the contract, and I'm in Central, so I closed out literally at open. So I got a fill at 8:30. And 10 seconds into market open. So into 10 seconds into market open, I got a fill, and thankfully Tastyworks gave me $200 better than what I put it in there. I actually put it in for $11.65. It gave me $13.70 on the contract, so I got $400 more than I wanted in here. That's just the way the option pricing was working at open. So not only did I get rewarded, I was able not to hold any more risk throughout the day. I took my profits, and now I can kind of coast the rest of the day out. So far, I've been sitting out, but you can take that instead of babysitting a winning position, you can actually take those profits and redeploy your capital. And one of the things here, looking at that options contract, let me pull it up here. So I had the 295 puts, today's expiration, and let me pull these up just so you can see the price action on these guys. So looking at yesterday they hit a low, or the day before, $1.70. I put them on for $2.90 area, and these popped up to the $13.70 this morning. So we had a huge gap up from $4, $5 up to $13 at open today. And if you're looking at this position here at these contract pricing, day of expiration, these all went from a high of, I guess I caught the high of the day. That's pretty. I didn't realize that at first. It looks like I caught the high of the day. This wick here is exactly $13.70. Man, that's crazy. That's crazy that what did I get a fill for? Yeah, $13.70 fill here. So I don't know how that worked out. Sometimes it just works out. This hit at open a low of 10.06 and a high of 13.70, and we caught the highs on that, surprisingly. Thankfully, Tastyworks was working for us. But that being said, the option pricing was after that moving down. It went from $13.70 all the way down to sub $6, like $5.75. And if you're trading day of expiration, time is not on your side. So an hour, 2 hours have gone by, and this has lost 50% of its value from the highs. And yes, I was still in the winning position, but as you can see here with the dips and the rips, and if you're watching Apple today, we had this huge rip up, and this is the low of the day here so far, is the 575. This is when it double topped here at 290, and now Apple's come down. So Apple's come down, hit 283, but this only came back up to around $10 or $11, and now it's dipping down to $9. So as it gets later in the day of expiration, there's going to be a lot more volatility in the contract pricing because theta is coming in hard. So now we only have about well, it's 11:36 right now, so we only have 3.5 hours left for the market to be open. So versus right at open we had 8 hours. Now we only have like 3 hours left. So that being said, time is not on your side when you're trading day of expiration contracts. And this is just I think a really good example. There's a lot of people that are trading day of expiration contracts that say, hey, I'm up 400%, I'm up 500%, I'm gonna see if I can get a 1,000% on this on day of expiration contract. And the question is, why are you doing that? Why are you letting it run when time is not on your side and the market can really do anything at this point? I mean, Apple could have ripped green and we could have gone down to zero. Apple could have came back up to 295, and look how bad right now the market is currently open. Look, this ripped from 284 up to 286 in this option contract. Just went from 1050 all the way down to 815. I mean, just took a 20% haircut just instantly. So that's why you don't want to play. You want to take, I say this all the time, take profits, redeploy capital, take profits, redeploy the capital, because profits are not guaranteed. And I know that in this fast market, profits come fast, but so do losses. Losses come super quick. If we look back a couple days ago on Apple, if we look at this chart here, there was some consolidation here, but bears were thinking, hey, I'm going to hold on my puts. Bulls were saying, I'm going to hold on to my calls. This can only go one or two ways. I mean, this looked like it was going to rip up or rip down. I mean, it was getting pretty tight between this 294 and 298 range right in here. And as the range gets tighter, it can only do one of two things, right? It can either go up or it can go down. I mean, I guess it could stay the same, but in this market, it's either going to go up or it's going to go down. So this was one of the flattest opens we've had in a while, and then it chose to rip up. And this wasn't a day of expiration, but you can see how quickly that goes against you. It went from 296 up to 300 in 45 minutes, because these are 15-minute candles here in 45 minutes, and you can see that in 45 minutes you can go from a winner to a loser, where you can easily lose 50%, 80%, 90% of the value of your contracts. And for me, that's why I've been playing closer to in the money or even in the money contracts right now. And depending on your delta and your theta, you have to do the math. Right now in the market, you're not getting the best deals, so you have to kind of scout for those deals and make sure that you're getting a better deal, because when the volatility is high and the bid and ask is wide, you could be the ripped off, or somebody else could be ripped off that you're selling the contract to. So you want to make sure that you're on the winning side of that as well. So that's why I've been specifically trying to trade highly liquid options like Apple, SPY, ES, which is the S&P futures options. I've been trading that. I really haven't been dipping into anything else. GC, gold futures, TLT as well. You want to stick to highly liquid options, and then because you're going to improve your success rate. Because when the stock starts to move like crazy, liquidity starts to dry up in those options contracts, or those in those less volume tickers. So if you want to trade something that has more liquidity, because you're going to have a better chance of getting out. Because I even showed you guys earlier in the week, I had a SPY contract, and this was a highly liquid. It went from $400, a $4 contract, down to a penny. It was only worth $1 within 5 minutes, and then it bounced back up. This is when the Fed minutes came out, and when the Fed minutes came out, when the Fed had the emergency rate cut. It went from $4 down to a penny, back up to $200. I took the trade off, because I'm like, I don't want to go max loss on this. I'd rather take a 50% loss than go max loss on this contract. So I took a $200 hit within minutes, but that instantly you saw the contract go all the way down to worthless, but from being worth $400 down to worthless. So in this market, anything can happen. Take your profits. And you won't regret taking your profits or rolling into new trades. There's always going to be another trade. We get locked into the mentality like, oh, I had such a great setup, I hit this target, I did so great, that you don't want to put in the work to find another setup. You don't want to put in the work to build all that together again. But at the same time, you're risking your profits, you're risking your account, you're putting your account at risk. I mean, anything could happen. The Fed can say something right now with the virus news could come out, offset your positions. If you're winning 400, 500, 1,000%, start scaling back some of the risk. If you feel like it's going to continue running and you have multiple contracts, feel free and scale back 50% to 80% and let some of them ride. There's nothing wrong with that. But for day of expiration, you don't want to play. And as you can see, I still wouldn't have been rewarded. I wouldn't have been rewarded waiting. From the highs to lows here right now, from where it is now, I sold at 1370. It's 850. That would have cost me $500 per contract. So instead of making the position right now, instead of me making $2,100 in realized profit, this would actually be down to $1,100. So waiting on day of expiration, I just want to stress this, is not key here. Find a better setup. Start trading. Start taking your profits off, and you'll definitely be thankful in the end when you see this, because this could easily go to zero. I'm being a little bit repetitive here, but we get this question all the time in Discord and Facebook, on YouTube. So I kind of just want to take this moment to address it. If you like the content, hit the like button. I definitely appreciate it. As always, stay safe, stay green. It's us versus herd.